This is where most people are looking for a step-by-step guide on what do I do to become wealthy when things are bad. Now there's a few different options that you can do, and this is going to depend on your risk tolerance and really what your goals are. If you are the type of person where you're like, I don't want to spend the time and energy researching companies. I don't want to spend all that effort trying to keep up with everything. I just want to get exposure to the markets. That way now, no matter what's happening, I will be able to benefit and I don't have to take on all the anxiety and stress. Well, if that's the type of goals that you have, well then one of the simplest things that you can do is just create a dollar cost average system where every week you're just buying a little bit more of some stocks or ETFs that you want to own. So an ETF is an exchange traded fund and it gives you exposure to a group of stocks. So some that you can consider are ETFs that give you exposure to the S&P 500, something like VOO or SPY. Little disclaimer, I am personally invested in VOO. So you can just start investing your money into ETFs like this every single week, and now you do this whether the market is up or down, and there are apps that will completely automate this for you. That way you don't have to manually do it. And now what you're doing is now you're just getting exposure to the markets. Now whether the market's going up or down, you're getting the benefit. You can also invest in ETFs that give you exposure to emerging markets. If you're worried about inflation, you can invest in ETFs that give you exposure to innovation and technology, because that's going to be the sector that gets hit the absolute hardest as interest rates go up and as the Fed is working to fight inflation. So you got to understand kind of where you want to be and how much risk tolerance you have. I've already made a video on my channel talking about different ETFs to invest in during a recession if you're looking for specific ETFs to invest in. So if you want to go the passive way, that's what you can do. Now if you want to be more actively involved, meaning you want to spend more time actually looking for the right investments, you want to spend more time actually keeping up with your investments, it's more risky, but you can also get better returns. Well, now what you can do is you can invest in individual companies, you can invest in real estate, you can potentially invest in cryptocurrency if that's something that you're interested in, or you can consider investing in actual businesses, startups or businesses that you can run and operate depending on how much cash you have and how involved that you want to be. Now, again, just like with everything else, what you're looking at here is a strong company that's being hit hard by the economy, because now you can come in and buy at a discount. The simplest example I can give you is back after the 2008 crash, I was buying real estate, some single family homes and apartment complexes. And what would happen with some of these apartment complexes is you had people that would get very excited and they were buying these apartment complexes with so much debt because they were trying to just manipulate the system and have 100% leverage and buy properties that they didn't know how to manage with a bunch of debt. And now they got in over their heads, and then real estate prices went down and now they're completely underwater and the banks forced them to sell. And when the bank is forcing you to sell, you're going to sell it at a discount, especially when the market is down, because the banks want to let go of their asset as fast as possible. And so in those situations, I was able to come in and buy some of these businesses, the apartment complex, at a big discount because the banks were forcing the seller to sell cheap. And so now the whole idea is you want to find the right opportunity for you. Maybe you want to invest in real estate, maybe not. Maybe you want to invest in stocks, maybe not. Maybe you want to invest in startups, maybe not. Maybe you want to own an actual physical business, maybe not. And this is where you just want to find the right opportunity where now the business is good. The business is strong. The underlying asset is good, but the economy is pushing the price of this asset down, and this is where you can come in and buy at a discount. And so now it's all just a matter of what it is that you want to invest in, because the first asset class in any sort of market correction or slowdown that gets hit the hardest are your liquid investments, things like stocks, things like cryptocurrency. These are more volatile, and as you see more fear or panic, you can see the price of these assets get hit very hard very quickly because they're liquid. You can buy and sell a stock in a second, but it can take up to a year, if not longer sometimes, to sell some real estate, depending on what kind of real estate it is. And so you just have to understand how these different asset classes move, and you want to find the right opportunity. Now again, does this mean that you want to wait for the perfect price? No, because one day in the near future, the Federal Reserve Bank could say, you know what? We're done fighting inflation. Instead, we're going to turn around and we're going to start stimulating the economy. We're going to start doing more quantitative easing. We're going to pump up the markets. This is possible. If that happens, then you can see the price of assets shoot up. So this is where, again, not only do you want to be financially educated and prepared, but you want to understand what's happening. That way you can actually capitalize on opportunities that happen around you. Because if you're just sitting there waiting for the perfect opportunity, well, you might just see it pass by you. When the 2020 market crash happened, when the economy first shut down in March and the early part of April in 2020, we saw the market collapse. The stock market was going down at the fastest rate ever. And during that time, I was making videos. And I kept talking about how I was buying, how I didn't know how much lower the market was going to go, but I already had a list of companies I wanted to own. And now I just kept buying. And I called it drip investing, where now I'm just buying in phases. Every time I see a good investment fall by 10 to 15%, I'm coming in and buying. And if it falls by another 10 to 15%, I come in and buy more aggressively. And the comments that I kept getting were, why would you buy more? Wait until it completely collapses and then come in and buy. Or the other comments were, the whole world is ending. Why would you want to buy stocks? Why would you want to own assets? And then what happened was the Federal Reserve Bank opened up the money printer, and then we saw the stock market rally at the fastest rate ever. So this is where you don't want to try to perfectly time the market, because there are external factors outside of just our economy that can influence the price of these assets. And this is where now you want to understand how things actually work, but also understand that these types of markets and economies create more opportunities than any other time. So this is where you want to get financially educated and prepared. That way you can actually capitalize on the opportunities that come your way. If you enjoyed this short clip from my longer videos, here's another clip that I think you'll love. And while you're at it, if you're interested in learning more about how to start generating passive income, our team put together an amazing guide on how to start generating passive income for free. All you got to do is click that button right over there. Thank you for watching, and as always, keep hustling.